Morning traders, Paul here with GammaEdge. Today is Monday, the 26th of September. Let's get started. Pause your players here, read to the bottom. If you agree, hit the play button. Summary for today, all our signals are in cash or they are short. Of course, this is paper trades only. Nothing here at GammaEdge is a recommendation to buy or sell any security. Our cumulative tick model is railroad track down. What that basically means is that risk off is the name of the game. We are watching for a crossing of the moving averages from below just to indicate that reversal. Watch for a continuation if that occurs to the upside, but also watch for a continuation on the open to the downside. The strongest signal is a reversal midday. So watch the key levels, say 11:30, which is the Euro close, and into the afternoon, 2 p.m., 2:30, 3 o'clock, etc. If you've not been paying attention, JPM rolls their biggest hedge fund this Friday. That's a big deal. There is an if-then that goes with this, and you should probably know about it at least at a high level. We're going to cover it just a little bit today. It's worthwhile to note that nGEX, which is the dominant structure where we have the majority of short-term puts, has dropped to 3,600 in the SPX. Two things can cause this to occur. Puts have been monetized at the older higher level, which was 37. And this exposes that lower level at 36, or more puts have been opened at the lower level in anticipation of further declines. Either way, it's worth watching. And below 3,600, there is virtually no support. When we take a look at the cumulative tick across the top here, we have effectively 52-week new high, new low breadth. And you can see it's getting worse. The red line grows day over day last week. More and more stocks were hitting up against their 52-week new low, and that is not good for the bulls. It's great for the bears. Friday's action with the filtered cumulative tick here shown in cyan shows that we actually hit the week low. That's this yellow dotted line that I have across here. Basically risk off into 3 p.m., fairly steady all day long. Thursday and Friday in the unfiltered cumulative tick showed linear down 2 days in a row. This is a serious risk off signal. If you weren't paying attention to this, you probably felt the pain if you were on the long side. So it is what it is. It pays to look for this, and we track this pretty religiously in our Discord. Finally, end of day check here. Short term is down and in cash. The intermediate term, which is below the ribbon, is down and in cash. And then the long term, all the moving averages have a downward slope. And when we see that, we're bearish all the way across the board. As I said, JPM rolls at the end of the week. 46,700 contracts are going to get rolled out to the end of December. When that occurs, and they are at these strikes, when that occurs, there's a significant chance that it will not be handled correctly, or it will have to be absorbed at a minimum by the market makers, by the dealers, and this is material. Why it's material? I've got the what's called terminal delta shown here in blue, and this is basically based on those three strikes: 3020, 3580, and 4005. Why this is a big deal is that we closed right here on Friday at this delta level, and we are day over day this week going to move towards this terminal level of zero. The dealers are on the other side of the trade. They're moving towards zero. And as they move towards zero, they are going to have to adjust when JPM rolls. JPM normally rolls at about a 55 delta. And when you are looking at 46,700 contracts, this is probably $11 to $12 billion worth of notional value that's going to have to get absorbed by the market on Friday. This could be material. Two scenarios that we're watching for is to play out and possibly move above the 4,005. We do not see that happening. We also don't like the idea of moving below 3,600, which would force the deltas to rail at the -1 limit level here. but it could help save the dealers as they approach either one of these inflection points that you see here for the week. So very, very important to watch this, how JPM handles the delta roll both on Friday, and the dislocation across the weekend will be very, very material into the latter part of the week, as well as the early part of next week. Taking a look at our levels for today, I want to highlight 4,300 is the upright on the right side. 3,600, as I said, has moved to negative GEX on the low side. This is down from 3,700, fairly significant levels. COI and POI, the call open interest, put open interest in the complex, is unchanged and has been pinned here for about 4 months, if not longer. Not really liquid, not moving. The ones we want to watch are at circle 1 and circle 2. Want to draw your eye to the expected move at circle 3. Pretty large range. This is a conservative value if you are a seller. This is an aggressive range if you are a buyer. 0 DTE today, not a lot to say here. Fairly strong magnitude in today's expiry. This is what we're defining as the transition zone, and Friday's close stopped right at the base of transition. We see this quite often, and it's worthwhile to attempt to track that. The 1 DTE, which will be the closing for tomorrow, Tuesday, fairly weak 1 DTE, and the projected range is about the same. So we're not anticipating a lot of contribution from the 1 DTE. Of course, the 0 DTE and intraday volume today will move this around a little bit, but we will watch this throughout the day. Combo complex, red across the board. We are put dominated gamma here. The key thing to watch here is transition starts at about 3,800 and goes north. We are well below that. We are looking approximately, almost 3% below that. Down below us, we've got the 3,600, which is that negative GEX level, fairly significant levels, and you can see it taper off fairly rapidly below this, and you can actually see that much more clear here. A lot still up to the upside here, 4,300, 3,600, the two goalposts of the structure. We closed here Friday. We have this big transition zone right here. We have a problem below 3,600. 3,505 is what we are registering as the left most significant gamma level. There's not a lot of support below 3,600. This does concern us. If we lose 3,600, there's not a lot stopping us to the left here. And if you recall, that JPM strike is at 3,580, which is going to be right in this zone. So that is a significant thing to watch. We're going to have to pay attention to that and just see what happens. If we get this double bar as support here, which is the JPM hedge, we might be able to pull the nose up, but if we lose that that left JPM hedge, those long puts, we could actually move down fairly aggressive because there's nothing really there, and it'll be a different game. So that's it for today. If you like today's commentary or have any questions, come and join us at GammaEdge.us. If you go to this link, it'll take you to a fairly blank website. We know this. We are updating the website. Click on the pricing tab. Fill out the blanks. That'll get you into the Discord. All the tools are turned on. 14-day free trial. No risk to you. Follow us on Twitter, please, at GammaEdges with an S. And then here on YouTube, of course, if you like today's commentary, let me know by hitting that like button. And, of course, subscribe, because we are putting content out, and Taylor puts out almost every day a new video at the end of the day summarizing what occurred. And Mike also puts out not only the open mics, but other materials. So urge everyone to come and follow us and look at the content. Well, with that, I bid you farewell. Hope to see you in the Discord, and make it a safe week. Thanks, everyone.